and welcome to FX Empire's look at Fibonacci trading, the retracement, the extensions, and some of the other various types of Fibonacci trading that you will see. Now, this is a 30,000 foot view, if you will, overview of Fibonacci. You should know that it refers to a mathematician in the Middle Ages coming out of Italy who was known as Leonardo Fibonacci. His full name was Pisano Bagola. There's a couple other names he went by, as was typical of the time period. Fibonacci is simply a sequence in mathematics. So, for example, you have 0, 1, 2, 3, 5, 8, 13, etc. And really, all you have to do is add the two previous numbers to get the next number. So, for example, 0 plus 1 is 1, 1 plus 2 is 3, 2 plus 3 is 5, etc. Now, there are ratios that are generated from these numbers within the sequence. They're considered to be golden ratios. You divide a number by the previous one, and then you get the 1.618 for each pair of numbers. And that's true throughout the infinite Fibonacci sequence. If you divide a number by two places higher, you get 0.382 as a result. So, for example, if you divide 2 by 5, that's your answer. The ratios do occur a lot in nature, and there are a multitude of examples that you can look into. A lot of them involve things like the way rivers bend, people's faces, like what's considered to be beautiful. There's also crops, as far as like the way certain crops grow and how they mutate over time. And it's used as a measuring distance that a security's traveled and suggests target levels for the markets going forward as well. We also see support based upon it. The retracement levels are multiple different levels, but the main ones are the 38.2, 50%, and 61.8%. Those are by far the most important, and in fact, most Fibonacci traders just use those. Now, one thing that I would bring up is that 50% is not actually a Fibonacci number, but it's a throwback from the old stock trading days where you just wait for half of the gains to be pulled back, to be given back, and then you enter, basically looking for value. Another thing that I would say about Fibonacci is it's so widespread, it doesn't really matter if there's any magical property. The reality is a lot of people follow it, so it becomes a self-fulfilling prophecy. It's not a primary indicator. It's something that you should use as a complement to your trading system. There are people out there that use nothing but Fibonacci, but truthfully, you will want to use it with maybe moving averages or large round numbers or something like that. Okay, so on the charts, and I'm using MetaTrader 4. Now, you're going to be really hard-pressed to find some type of package that doesn't offer Fibonacci tools, but I have a simple bar chart kind of zoomed out for you just to kind of show you how this works. There are various packages, like I said, that will feature Fibonacci. But so, for example, what you want to do is you want to look for a swing high or a swing low, and then extend the Fibonacci tool from there. Now, the Fibonacci retracement tool is by far the most common, and you can see it's here on this bar, or you can go up to the top bar up here and go through all of your menus here, and you can see that your charts, you can zoom in, you can zoom out, you do properties, change all of this stuff, but you can insert Fibonacci, retracement, time zone fans, arcs, and expansion. So I'm doing the retracement, which is the most common way to use this. So as I am at a swing high here after the bounce, or you could even use this one, and I extend, I click and drag and I extend, you can see that there have been various places where the market's reacted. And the 38.2 level on the pullback has offered resistance, and you could have sold there a couple of times, 3 times really. And now that we have bounced through there, the 61.8 Fibonacci retracement level has held up on the daily and the Aussie Kiwi. So that's a really quick example of how it might look, say, on the daily chart. Now, on the 4-hour charts and lower time frames, quite often you'll see them used there as well. So let's go ahead, and this was a swing high, and I extended down and see if it matches up. Yeah, you can see that the 61.8% level brought in a lot of selling, and we continued. We retraced the move and then continue going higher. Now, it can work in either direction. There's no directionality to the validity of it. You can see that this move higher found the 38.2 level supportive and then broke even higher. So that's basically how Fibonacci retracement works. It's just giving you an idea of where the trend may continue on a pullback. It's a good way to think of it. So when I look at Fibonacci expansion, it's a little bit trickier to get the tool to work with you. It's and for me at least, it's not as reliable. It's not used as commonly. So you can see that basically 100, 61.8. These are targets that you on this move here you might be aiming for. Again, though, retracement is almost always what you see. There are a few other ones. So like Fibonacci Fans, for example, you can see that if you go from the bottom to the top here, it gives you an idea of where the market could find support and resistance through time. For example, we went from here to here, and that was the same thing that we did with that retracement, found the 38.2 to be supportive. Well, here at this line, it's the 50 that behaved. For me, it's a little less remarkable. The Fibonacci trader tends to believe in the magic of these numbers, and that's pretty much where I part ways. I don't even think it is necessarily anything special. I just think a lot of people believe in it, so therefore it becomes self-fulfilling, like I said. Quite often, what you'll see, and I'll go ahead and draw this here, say 1.06, maybe 1.0605 might be a little bit better representation. So, okay, so 1.0650 or so, there's a certain amount of support there. And then you can see that this area begins support, and then you've got that there. Well, now you have something to bid on, kind of build your trade on. And if I do like the arcs, you can see that it essentially tells you the same thing. Now, the thing about the Fibonacci arcs is the 38 expands with time. You can see it's starting to rise. It's the same idea. It's just a different way to build a Fibonacci retracement. Fibonacci arcs are extremely unheard of. I mean, it's a very, very, very rare type of Fibonacci retracement and trading. There are Fibonacci time zones, and I will change this over to a color that you can see. So you can see that I expanded to the upside. Parameters visualization, you can see that they are lines that go across, and these are representative of time, if you will. Go ahead and make that black. So you can see that the time goes on, and these are spaced upon Fibonacci ratios 1, 2, 3, 5, and 8. So it's basically that's the length of the first move, the second move, equal time, the third move, which is 2 plus 1, and then 5, and then 8, and on and on and on. You can see that, say, for example, if that was an entire day, which it's not, but let's just say it was, and that would be second day, third day, fifth day, eighth day, or hour, or whatever time measurement you're working with. And the idea is something will happen there. Again, this is pretty out there as far as traders are concerned. You don't really see it very often. But it does exist, and it's something you should be aware of. By far, hands down, it's the retracement, the original one, that is actually built on the bar here that most people use. And again, you can see, I can make a clear argument that there was support there anyways, previous. So you can make an argument for that. You could also make an argument if you extend this out all the way to the top. Okay, so why did this area at the 61.8 hold and cause a bounce a couple of times? Well, you can say that it's the magic of the number, or it's the fact that we had buyers here. Either one doesn't matter. It means the same thing. You can see that the 38.2 level offered support, but it also offered resistance before it was the 38.2 level. So I'm a little bit mixed as to whether or not I believe in the magic, but what I do think is that laid on top of basic support and resistance, or, Bollinger Bands, whatever you use, then you've got several different reasons for traders to be looking to buy, and then you have something worth trading. I hope this has been informative and leads you to explore the idea of Fibonacci trading forward. Thanks a lot for watching, and we'll see you in the next video.